The accounting equation. This lesson introduces the basic rule that all accounting follows. Learning objectives. By the end of this lesson, you should be able to understand the accounting equation, identify assets, liabilities, and owner's equity, and apply the equation using simple examples. These objectives help you not only memorize the formula, but also understand how it works in real business situations. What is the accounting equation? So, what is the accounting equation? These questions help us understand how businesses track their money and resources. The accounting equation is the foundation of accounting. It shows the relationship between what a business owns and how the resources are financed. This means every business resource comes from either borrowing money or investing money. The formula is assets equals liabilities plus owner's equity. This means that what a company owns called assets is financed by what it owes to others called liabilities, plus what belongs to the owners, which is owner's equity. In simple terms, everything a business has comes from creditors or the owner. Assets. Assets are what the business owns. These are the things the business uses to operate every day. Examples include cash for payments, supplies for daily use, equipment for work, vehicles for transportation, and land for long-term use. Liabilities. Liabilities are what the business owes to others. These are responsibilities the business needs to pay in the future, like loans payable, accounts payable, notes payable, and unpaid bills. Owner's equity. Owner's equity is the owner's claim on the business. It represents the owner's capital or investment in the profit kept in the business. This tells us how much of the business truly belongs to the owner. Why the equation must balance? Now you might wonder, why does this equation always need to balance? The equation must always balance because every transaction affects at least two accounts. This system keeps records accurate and complete, helps prevent errors, and shows fairness between the business, the owner, and creditors. Let's now look at an example of the accounting equation to better understand how it works. Assets equals liabilities plus equity. Clerk Santos invests 5,000 pesos cash and borrows 3,000 pesos from the bank. This means the business received money from both the owner and a lender. The total assets are 8,000 pesos in cash. Owner's equity, called Santos Capital, is 5,000 pesos. Liabilities or the bank loan are 3,000 pesos. When we add liabilities and equity, it equals the total assets. Assets equals liabilities plus equity. A food truck business buys equipment for 20,000 pesos. 12,000 is paid in cash while 8,000 is unpaid. The equipment is an asset worth 20,000 pesos. The 12,000 pesos paid in cash comes from the owner's equity. The 8,000 pesos unpaid amount becomes a liability. Once again, the equation stays balanced. Assets equals liabilities plus equity. Miss Andrea Angeles invests 20,000 pesos and buys book inventory worth 12,000 pesos. She has no loans, so there are no liabilities. The assets are cash 8,000 plus inventory 12,000 pesos, totaling 20,000 pesos. Since there are no liabilities, all assets come from the owner's capital. Quick tips. Remember these quick tips. Assets are on the left. Liabilities and equity are on the right. Every transaction affects both sides. If one side changes, the other must adjust. If your equation balances, you're doing it right. And And that ends our lesson on the accounting equation. Remember, assets must always be equal to liabilities plus owner's equity. Thank you. And that's the end of this tutorial.